Let me ask you something. Do you ever feel like investing should be simple, but somehow it always feels confusing, overwhelming, or even intimidating? Well, you're not alone. I've been investing for over 24 years, and I can honestly say this. Most people don't fail because they're lazy. They fail because nobody ever explained investing properly. And that's exactly why I'm making this video. Today, I'm answering the top 10 investing questions I get asked again and again inside my Skool community, all focused on investing in the stock market. No hype, no stock picking, no get rich quick schemes. My story and why I care about this so much. Before we dive in, I want to tell you something personal. When I was 18, I started investing for the first time. I put £500 a month into a stocks and shares ISA, and then I stopped. I spent the money on a lad's holiday. Huge mistake. If I had simply kept investing £500 a month into something like the SP 500, earning an average 10% a year, I'd have around 592,000 today. And here's the painful part. 450,000 of that would be compound growth, not my own money. That lesson changed everything for me back in 2018. Because the truth is, the best time to invest was 20 years ago. The second best time is now, today. That's why I'm so passionate about helping people invest properly, especially here in the UK. Why I created my investing community on Skool. Inside my Skool community, I help people understand investing without jargon, build confidence, avoid expensive mistakes, learn how to invest long-term using index funds and other assets. You get weekly content here on my YouTube channel, a weekly newsletter, group calls, one-to-one support, a community of people on the same path, same journey, and right now it's free for 7 days. If you like it, you stay. If you don't get any value, no worries. So it's risk-free. But let's get into what you really came for. Your top 10 investing questions. 1. How do I set up a SIP? A SIP, self-invested personal pension, is one of the most powerful tools available here in the UK. Here's why. You get 20% tax relief automatically. Higher rate taxpayers can claim even more. It's one of the most tax efficient ways to build long-term wealth. Example, you invest £80, HMRC tops it up to £100. That's an instant 25% boost. If you're a limited company director, it's even better. Contributions come straight from company profits, so you pay less tax. Popular providers include Vanguard, simple and cheap, AJ Bell, more flexibility, Hargreaves and Lansdowne, really good platform, higher fees but loads of products to choose from, and the customer service is really good. You can usually access your SIP from the age of 55, rising to 57 in 2028. 25% can be taken tax-free, the rest is taxed as income. If this is the type of info you feel you need, hit subscribe so we can build wealth together. 2. Can I combine old pensions? Yes, and for most people, you probably should. You can consolidate old workplace pensions into one SIP. Easy to manage, one strategy, low fees. The only time to be careful is if you have defined benefit pensions. Guaranteed annuity rates, otherwise, consolidation usually simplifies your life massively. As you can probably guess, I'm not a financial advisor, and this isn't me giving out financial advice. 3. Which SP 500 ETF should I choose? As I've just mentioned, I can't give advice, but I can explain options. Popular UK ETFs include Vanguard SP 500, iShares SP 500, SPDR SP 500. Key things to look for: low fees, accumulation version, which reinvest dividends, platform fees. You may also see currency hedged versions, which reduce GBP USD risk, but they cost more. Nothing wrong with either approach, just understand the trade-off. And if you want any more info relating to these questions, ask me anything below in the comments. If I can help, I will. 4. Should I invest in the FTSE 100, SP 500 or global funds? Here's my honest breakdown. FTSE 100, high dividends, low growth, heavy in oil, banks, old industries. SP 500, strong growth, tech heavy, historically excellent returns. And you're talking around 10% on average. Global index funds, diversified across the world. Less volatility, less concentration risk. My personal choice, global diversification. I've invested in the Vanguard Life Strategy 100 for years, for myself, my wife, and our 2 daughters. 5. What about currency risk? If you're investing in US funds from the UK, currency matters. When the pound strengthens, your returns can drop, even if the market goes up. That's why some investors choose GBP hedged ETFs. They reduce currency swings, risks, but cost slightly more. There's no right answer. Just understand what you're exposed to. 6. How much should I invest each month? The honest answer, whatever you can afford, consistently. Consistency beats everything. £100 a month invested for 30 years beats 1,000 invested once. Start small, increase over time. 7. Should I invest monthly or lump sum? Statistically, lump sum wins most of the time. Monthly investing wins emotionally. Most people should use monthly investing to reduce stress and avoid bad timing. This is what I've learned from experience and from hundreds of investing books over the years. And if you want my top 5 investing books, type book below in the comments. 8. How do I choose the right index fund? Here's my simple process. Decide your risk level, choose global or US focused, compare fees, performance, fund size, use tools like Morningstar. Keep it boring, boring works. If you want more info on exactly how to choose an index fund, see below for a recent video. 9. How long should I invest for? Minimum mindset, 10 years. Ideal mindset, 20 to 30 years. The market rewards patience, not predictions. For example, if you invest £500 a month into a low-cost index fund and get average returns of 10%, you're talking over £1 million after 30 years. 10. What's the biggest mistake new investors make? Trying to be clever, chasing trends, timing the market, overtrading, panic selling. The real secret, consistency plus patience, low cost equals wealth. If you want to learn from some of my biggest mistakes, by the way, from 24 years of investing, again, see below for a recent video. Summary. If you take one thing from this video, let it be this. You don't need to be smart. You don't need time to time the market. You just need to start. If you want help, guidance, or community, have a look at my Skool group below. It's free for 7 days, as I've said, and you'll be surrounded by hundreds of other investors trying to do the same thing, trying to build wealth, trying to potentially retire early.